All right, deep divers, welcome back to another crypto deep dive with us. I gotta say, I am still buzzing from all the awesome comments and questions you guys left on our last crypto episode.
Here.
So seriously, keep those gems coming. But today, we're switching gears a little bit. We're gonna zoom out and look at the bigger economic picture. The kind of stuff that might not seem directly related to crypto at first glance.
Yeah, it's kind of like when you're laser focused on charting those altcoins,
Totally.
and then bam, out of nowhere, a massive economic hurricane swirls in,
Oh yeah, for sure.
and it shakes up everything.
And this is exactly why we're here today, folks. We're going to try to figure out if this economic storm could actually be good news for crypto. And trust me, it's got something to do with interest rates and maybe even the U.S. government's debt. I know, buckle up. It's going to be a wild ride.
You hit the nail on the head there. It's like this. We often think about crypto as its own separate thing, this digital Wild West.
Yeah.
But the reality is it's deeply connected to the global financial system. And right now, there's this massive elephant in the room that no one seems to want to talk about.
Okay, I'm listening.
The U.S. debt.
Okay, yeah, debt crisis.
Yeah.
It's like this buzzword that gets thrown around all the time.
Yeah.
But honestly, it always feels kind of like something economists argue about while sipping their, fancy lattes.
Right.
I mean, what does it actually mean for me?
Yeah.
For my crypto investments?
It's not just economists talking anymore. We're talking about a mind-blowing $9.2 trillion of U.S. debt that's coming due in 2025.
Whoa, 9.2 trillion. That's like more money than I can even imagine. I mean, help me wrap my head around this. What does that actually look like in the real world?
So, imagine you've maxed out every credit card you have.
Right. I've been there.
And now you've got to refinance that debt at sky-high interest rates.
Oof. Yeah, that feeling of credit card dread. I know it well.
Right.
But why is 2025 such a crucial year for this, for this whole debt thing?
Well, it's like this. Imagine you've got this huge loan and it's time to refinance. It's the same idea. But here's the catch. Interest rates are through the roof. Right now, the U.S. government is facing that exact situation. And remember, they're in this tricky spot where they're spending way more than they're taking in.
Yeah, like almost $2 for every $1 they bring in, right?
Exactly. So they need to keep those interest rates low to even manage this massive debt.
Okay. So they're kind of stuck between a rock and a hard place. They need low interest rates to deal with this mountain of debt. But inflation is pushing rates higher. It's like a financial tug of war, and it feels like something has to give.
You got it. And that's where it gets really interesting, even maybe a little bit unnerving.
Okay, I'm all ears.
Some economists believe that the U.S. government might actually be secretly hoping for a recession.
Wait, hold on. A recession, that's like the opposite of what a government usually wants. I mean, people lose their jobs, businesses struggle. It's not exactly a recipe for a happy electorate, is it?
You're right. Recessions are usually seen as a bad thing. But in this situation, a recession could actually be the solution they need, even though it might be a painful one.
Okay, now I am officially intrigued. Explain this to me like I'm 5, because I'm getting some serious financial whiplash here.
Sure. So picture this. When a recession hits the Federal Reserve, basically the central bank of the U.S.,
Right.
they step in and try to stimulate the economy. And you know what one of their main tools is?
What's that?
Slashing interest rates.
Ah, okay, I see where you're going with this. Lower interest rates make it way easier for the government to refinance that mountain of debt that we were talking about. But a recession? Seriously?
It might sound crazy, I know, but think about it. There are signs that a recession might already be brewing, and one big indicator, falling oil prices.
Okay, you have officially piqued my curiosity.
What?
What do oil prices have to do with all of this? Stay tuned, listeners, because we're about to dive deep on this one.
Oh, yeah.
Stay with us. Okay, so we've got this potential debt crisis looming, and now you're saying falling oil prices could be a sign of a recession, which might actually be the government's, secret weapon for dealing with this whole mess. I swear my brain is doing backflips trying to keep up here.
It's definitely a wild ride. And trust me, you're not alone in feeling like you're strapped into a financial roller coaster. But let's unpack this oil price thing because it's more connected than you might think.
Yeah, please lay it on me. I am all ears.
So falling oil prices generally lead to lower inflation. Remember inflation, that pesky thing that makes everything more expensive?
Oh, yeah, I know inflation.
When inflation cools down, it gives the Federal Reserve, more room to maneuver, more freedom to cut those interest rates without sending inflation spiraling out of control.
Okay, I'm starting to see the picture here. Lower oil prices, lower inflation, lower interest rates. It's like a domino effect, but with, trillions of dollars at stake. But let's bring this back to the crypto world. How does this potential economic, earthquake impact those of us holding our digital assets?
That's the million-dollar question, isn't it? And it's one that has crypto enthusiasts and skeptics alike on the edge of their seats. See, recessions tend to make people a bit risk-averse. When the economy starts wobbling, investors often flock to, safer havens like gold or government bonds.
Yeah, that makes sense.
Hmm.
When uncertainty creeps in, people tend to batten down the hatches and protect their assets. But crypto is anything but a safe haven, right?
True, crypto is known for its volatility, its wild price swings. But here's where things get interesting. Remember those lower interest rates we were talking about? Well, they could actually make crypto more appealing to certain investors.
Wait, hold up.
Huh.
How could a bad economy make crypto more attractive? You're going to have to explain this one to me, like I'm talking to my grandma who just discovered Bitcoin.
Think of it like this. When interest rates are super low, traditional investments like bonds just aren't that exciting. You're barely making any return. And inflation might even be eating away at your gains. Suddenly, the potential high returns of crypto, even with all the risks, start to look a lot more enticing.
Okay,
Okay,
so you're saying it's like if you're going to gamble anyway, might as well go big or go home.
Right, precisely. And there's another factor at play here. Crypto, especially Bitcoin, has often been touted as a hedge against inflation. So if a recession leads to more government spending and potentially even more inflation down the line, some investors might see crypto as a way to protect their purchasing power.
So it's like a crypto tug of war, with risk aversion pushing some investors away, but the allure of high returns and inflation hedging pulling others in. This is getting complex. We've covered a lot of ground already, and before we wrap up, I just want to remind everyone, if you're enjoying this deep dive into the economic forces shaping the crypto landscape, hit that subscribe button so you don't miss out on future episodes. We'll be right back with the final part of our analysis.
And we are back, deep divers, for the final stretch of our deep dive, exploring this potential economic, whirlwind and its impact on the crypto world. A few things are getting pretty intense, but, hopefully you're starting to see how these seemingly unrelated events like a debt crisis and falling oil prices can actually create some pretty huge waves in the crypto market.
It's all connected, and as we, kind of navigate these uncharted waters, it's more important than ever to have a solid plan. Okay, so let's get tactical. If this recession scenario does, actually play out, what should crypto investors be thinking about?
Well, first and foremost, never forget the golden rule of investing, especially in something as volatile as crypto. Don't invest more than you can afford to lose. A recession can amplify those market swings, so make sure you have a strong financial foundation and, you're not putting your essential needs at risk.
Solid advice. It's so easy to get caught up in the hype. But, risk management is absolutely key, especially when the economic seas get stormy. What else should our crypto crew keep in mind?
Diversification is your friend. Don't put all your eggs in one basket. Spread your investments across different asset classes, including some that tend to hold up well during recessions, like precious metals. That way you're not completely exposed if one particular sector takes a hit.
Right. It's all about balance. Don't let fear or hype lead you to make rash decisions. Take a deep breath, assess your portfolio, and make sure you're comfortable with the level of risk you're taking.
And here's a tip that's often overlooked. Stay informed. Keep up with the latest economic news and be prepared to adjust your investment strategy as needed. There's a lot of noise out there, but tuning into reliable sources and, dare I say, insightful podcasts like this one can help you stay ahead of the curve.
Couldn't agree more. Knowledge is power, especially in the fast-paced world of crypto. Speaking of knowledge, we've got a whole library of deep dives on our channel covering all sorts of fascinating topics. So if you're hungry for more insights, make sure to hit that subscribe button.
And finally, remember, the long game recessions are cyclical. They don't last forever. If you believe in the long-term potential of crypto, don't panic and sell everything at the first sign of trouble. Consider this a potential opportunity to buy low and ride the wave back up when the economy recovers.
That's a great point. Sometimes the best move is to simply weather the storm. Patience and perspective are essential.
Absolutely. It's all about staying calm, doing your research, and, making informed decisions that align with your overall financial goals.
So to sum it all up, we've got this potential debt crisis brewing, a possible recession on the horizon, and crypto poised at a crossroads. It's a lot to process. What's the key takeaway you want our listeners to walk away with today?
I think the biggest lesson here is that the crypto market doesn't exist in a vacuum. It's intertwined with the global economy in ways that we're only beginning to understand. By paying attention to these larger economic trends, we can make more informed decisions as investors and position ourselves for whatever the future holds, whether it's a recession, a boom, or something completely unexpected.
Well said. And as always, we encourage you to do your own research, think critically, and come to your own conclusions. We're just here to provide some food for thought and spark those important conversations.
Exactly. We believe in empowering you, our amazing listeners, to make the best decisions for your financial well-being.
All right, everyone, that concludes our deep dive into the potential impact of a recession on the crypto world. We hope you found it insightful and maybe even a little bit thrilling. If you enjoyed this episode, please give it a like, share it with your friends who are also crypto curious, and let us know your thoughts in the comments below.
And if you're ready to keep exploring the fascinating world of crypto and finance with us, hit that subscribe button. We release new deep dives every week, so stay tuned for more insightful discussions and thought-provoking analysis.
Until next time, stay curious, stay informed, and stay ahead of the curve.